Welcome to Talk Tickers. We're the place that cuts through all that earnings call noise to get you the essential insights.
Helping you stay informed, basically.
Exactly. And today we're doing a deep dive into RLX Technology, Inc. That's ticker RLX. We're looking at their second quarter 2025 earnings call.
Right. There was quite a bit to unpack from this one.
Yeah, our mission here is really to break down the critical bits, the financials, the strategy, and give you a sense of why the market seemed to like what it heard.
Mm-hmm. Definitely a positive reaction initially.
So right off the bat, let's look at the headline numbers. Net revenues came in at RMB 880 million.
Which is what, about 122.8 million US dollars?
Yeah, roughly.
Yeah.
And that's a big jump, 40.3% year over year.
Wow. Okay. That's substantial.
Definitely. Non-GAAP diluted EPS was RMB 0.218, so about 3 cents US.
Okay. Solid bottom line there, too.
And operating cash flow, RMB 229.6 million. Again, a really significant increase compared to last year.
Cash generation looks strong then.
It does. And one more key metric. Yeah. Gross margin expanded. It hit 27.5%.
Up 230 basis points year over year. That's a healthy improvement.
Absolutely. So these figures, they paint a pretty strong picture, don't they? Especially that revenue and cash flow.
No doubt. That kind of top-line growth, over 40%, you don't see that every day, especially in this sector. It suggests they're doing more than just riding a wave.
Like maybe taking share.
Potentially, yeah. Especially if regulations are tightening and hitting smaller players. And that non-GAAP EPS, it gives you a clearer view of the core business profitability without some of the noise. Looks healthy.
Okay, let's unpack this then. There's clearly a lot to dig into here.
For sure.
So starting with that revenue beat, you mentioned over 40% growth. The call pointed to sort of two main engines driving that. First was their international strategy, really kicking in. And that includes consolidating that big European acquisition they made.
Right. That acquisition closed, end of May? So only 1 month in these numbers?
Exactly. June financials were included, so that impact will likely grow. And second, strong growth back in China.
Okay, what's driving the China growth?
Seems to be a combination of things. Stricter controls hitting the illegal market, which opens up space for compliant players like RLX, plus successful product launches they had in the back half of last year are gaining traction.
So it's fascinating, isn't it? They're leveraging global expansion and domestic compliance. It's like they've turned regulatory headwinds, which many see as a negative, into, a competitive advantage.
Yeah, capturing share from those who maybe can't keep up with the rules. It's not just organic market growth. It's almost like a strategic land grab.
Right. Proving compliance can actually fuel growth if you play it right.
And it wasn't just the top line. Let's talk margins. Gross margin up to 27.5%, like we said, 230 basis points. And the non-GAAP operating margin hit 13.2%. That's up over 5 percentage points year over year. Huge operating leverage.
Yeah, that's a significant expansion. So what's behind that?
Well, the company pointed to a few things. A better revenue mix, partly from those higher margin international markets starting to contribute more.
Okay, that makes sense.
Plus continued cost optimization efforts and just general operating leverage, sales growing faster than costs, especially as that international side ramped up.
And something else that often gets overlooked but is really key to their operational strength, that negative cash conversion cycle.
Right. Explain that a bit.
Well, basically, they collect cash from their customers much faster than they pay their suppliers. Think about it. Inventory turns over in 31 days. They collect receivables in just 16 days.
16 days.
But they take 67 days to pay their suppliers.
So they're essentially using their suppliers' cash to fund operations.
Exactly. It's a sign of really efficient working capital management and, frankly, a strong competitive position. Gives them a lot of financial flexibility.
Speaking of financial flexibility, the cash position, it's pretty massive.
Yeah. How much are they sitting on now?
As of June 30th, total financial assets, cash, equivalents, short-term investments, RMB 15.5 billion.
Which is about 2.2 billion US dollars. That's a serious war chest.
It really is. And they're returning some of it. They announced another cash dividend.
Oh, yeah.
Yep, 1 cents per share, or ADS. Record date September 12th, payment around the 26th.
Okay, consistent returns. Isn't that their third since the IPO?
It is. Plus, they're still doing share buybacks.
Yeah.
They bought back over $300 million worth by the end of last year, and they mentioned more this year, too.
So this raises that classic question, doesn't it? You've got this huge cash pile. You're rewarding shareholders. How do you balance that with investing enough for future growth?
It's the big strategic question.
Absolutely. It signals confidence, financial health for sure, but it also means they have significant, dry powder. They could do more acquisitions, boost R&D, maybe accelerate market entries even faster.
Gives them options,
At
definitely.
a powerful position in a pretty dynamic industry.
Absolutely. It is a balancing act. So let's shift gears a bit, talk more about that strategic direction, operational highlights, starting with that international expansion.
The European acquisition.
Right. They finished consolidating that European e-vapor company. May 31st completion, June financials included. And this isn't some small startup they bought.
No, sounded like an established player.
Very established. 17-year track record, full capabilities, R&D, manufacturing, warehousing, distribution, even retail and e-commerce. Plus strong brands of its own.
Okay, so a significant platform acquisition then.
Exactly. And RLX's approach there is interesting. They're not just flooding the acquired channels with RLX brands.
Oh, how are they handling it?
They're acting more like a platform owner. There'll be a retailer, a distribution partner, and a brand operator within that network. RLX products will compete alongside the other brands already there.
Ah, interesting. So they get the infrastructure, the market access, the local know-how, but they're letting their products compete on merit within that system.
Seems to be the idea. Gain deeper penetration, more insights.
Connecting this to the bigger picture, this acquisition. It's not just about adding revenue immediately, though that will come. It's really about getting critical local knowledge and capabilities, especially in Europe, where regulations are, let's say, formalizing rapidly.
It's a beachhead.
It's both defensive and offensive, right? Defensive because they secure a foothold and understand the rules from the inside. Offensive because they leverage existing infrastructure to grow faster.
Good points. And it sounds like they have plans to build on this, strengthening distribution in Asia and Europe in the second half of this year, and then looking ahead, early 2026. Plans to expand into more European countries, some Asian ones, and potentially another continent altogether.
Wow. Okay, so the ambition is definitely global scale. They're not just dipping their toes in.
Seems like they're embedding themselves, acquiring not just sales, but networks and regulatory understanding.
So they're shoring up the financials, planting flags overseas, but the products themselves, that landscape is shifting too, isn't it? How are they future-proofing their portfolio?
Good question. That brings us to their multi-category strategy. They're looking beyond just e-vapor now.
Ah, like what?
Modern oral nicotine products. They mentioned a pilot program for these, getting positive feedback from distributors, and they're even developing a B2B prototype.
Okay, that diversification makes a lot of sense. Oral nicotine is a fast-growing segment globally.
Reduces risk too, right?
Yeah.
Less reliance on just one category.
Absolutely. Different smokeless products appeal to different users, different needs, and regulators often look at categories differently too. So yeah, capturing broader market share, reducing category risk, smart move.
Another big theme, almost a tailwind for RLX, it seems, is this whole regulatory environment. Compliance.
Right. Tightening rules globally, crackdowns on illegal stuff.
Exactly. And RLX seems to be benefiting directly, both overseas and in China. They even mentioned helping authorities, providing over 4,000 leads on illegal operations in China.
Which is interesting. It helps clean up the market for compliant players like them in the near term. You do wonder, though, does driving it further underground make it harder to track long term?
Potentially. But for now.
For now, the impact seems clear. Gray market, black market share declines. That creates an opportunity. And reputable retailers, convenience stores, gas stations, key accounts, they want to partner with compliant, reliable businesses.
Especially ones with leading market share and a clean record.
Precisely. The China market is still tough. Estimates are 80–90% might still be illicit. But that compliant slice of the pie is growing, and RLX is positioning itself right at the forefront. Compliance becomes a competitive moat.
Okay, what about product innovation within e-vapor itself? There was talk about this big puff effect trend.
Yeah, consumers wanting higher capacity devices.
Right. RLX said they've responded with specific products tailored for that. They seem to think the market will sort of stabilize around these higher capacities by year end, creating a new baseline.
Adapting to consumer demand makes sense.
And importantly, they also talked about shifting away from disposables.
Ah, because of the environmental concerns and bans?
Exactly. Lots of negative attention, outright bans in some places. RLX is emphasizing their strength in cartridge-based systems, both closed pods and open systems.
Positioning those as more sustainable, more compliant long-term solutions.
That's the message.
Which shows some foresight, right? anticipating where the regulatory and, frankly, public sentiment is heading. And since they already have strong tech in cartridge systems, it's leveraging an existing strength, not starting from scratch, adapting, not just chasing trends.
Okay, let's wrap all this into some investor context. The market reaction, as we touched on, was positive.
Yeah, stock price moved up nicely, volume spiked right after the announcement.
Clear sign the market liked the results and the strategy they laid out.
And putting it in broader context, RLX's one-year total return, up 33%.
It's pretty good. How does that compare?
Well, significantly better than the broader market. SPY was up 16% in the same period. The consumer staples ETF, XLP, only up about 3.9%.
So, definite outperformance. Investors are clearly buying into the story.
Seems that way. The strategic moves are resonating.
So, looking ahead, what are the key things investors should watch? What are the catalysts?
Well, execution updates on that European platform, obviously. How well did they integrate and leverage it?
Right.
News on new market entries, those additional Asian and European countries, that other continent. Can they sustain those gross margins in the mid-20s or higher? That'll be key.
The dividend dates we mentioned. And of course,
ongoing regulatory shifts. Any major changes could impact them positively or negatively depending on the specifics. But generally, crackdowns on illicit trade seem to favor them.
So the bottom line for you, the investor, listening to this, what's the narrative here?
It's a company that seems to be actively, maybe even proactively, adapting to regulatory changes. They're using M&A smartly for rapid expansion and capability building, and they're diversifying their products for, long-term resilience.
Navigating a tricky industry with a pretty clear game plan.
That's how it appears, yeah.
All right, let's put on our hypothetical investment committee hats for a moment. Let's talk RLX.
Okay.
The pitch?
The Q2 numbers were definitely a beat. Market liked it, especially that overseas story, the acquisition. You're looking at a company really navigating these tightening global rules, almost becoming a compliant consolidator, picking up share.
They've got the cash to do it too. They're returning some, but clearly investing heavily.
Exactly. So here's a thought, purely for discussion. Remember, this is not financial advice.
Disclaimer noted.
They're pushing hard into Europe, Asia, maybe another continent by early 2026, building local operations, acquiring distribution, regulatory know-how.
Embedding themselves.
So my slightly out there play, a long straddle option strategy, maybe expiring sometime in Q1 2026.
Okay, a straddle. Betting on volatility. Why?
Because while the overall trend looks positive growth, margins expanding, navigating all these different international regulations creates inherent uncertainty, volatility.
Right. A sudden policy shift in a key market could really hit the stock. Or, conversely, a major win, like a successful new market entry faster than expected, or a huge crackdown on illicit trade that clears the field, could send it soaring. The straddle lets you potentially profit from a big move, either way.
You're betting on the magnitude of change, not necessarily the direction. Interesting. High risk, potentially high reward if there's a major event.
Exactly. It's a volatility play tied to their aggressive expansion and the regulatory flux. Again, just a thought exercise.
Understood.
So to quickly recap the core story, RLX, strong Q2, driven by international expansion, that key European acquisition. They've got a multi-category product strategy taking shape. They're leaning into compliance as an advantage and returning cash to shareholders.
A lot going on navigating a complex space.
Definitely. Which leads to maybe a final thought for you, the listener, to ponder. As you look at companies like RLX in this industry, an industry just defined by rapid regulatory change, constant scrutiny, ask yourself this. Is it just the biggest players who win? Or is it the ones who are most agile, most innovative, and critically most compliant who will ultimately capture the most enduring value and really shape where things go next?
That's the key question, isn't it? Agility and compliance versus sheer scale.
Yeah.
Something to think about.
Absolutely. And remember, this information is purely for educational purposes and definitely not financial advice. Always, always do your own due diligence.
Couldn't agree more.
Thanks for joining us for this deep dive into RLX Technology's Q2 2025 earnings.